And welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, zinniawealth.com, ZINNIA wealth.com. If it's time to talk about your retirement, let's get that conversation going. Give us a call, 833-368-3680. Well, let's talk a little bit about the paycheck in retirement here, because this is the most important thing people want to know. Sharice, how am I getting paid in retirement? And we have brought up so many different ways that people, they don't even know about. I mean, things like structured notes, and we talk about pensions and Social Security and annuities and bonds and all these different things. But using dividend-paying stocks is another way to build a paycheck in retirement. And somebody wrote into the Money Wise advice column and says, I'm 60 years old and I'm prepping for retirement. I've saved $1.2 million. I would like to live completely off dividend income. Can I do that?
Right. And you can. And it depends on the risk you're willing to take. Because if you need $80,000 from that 1.2 million, that means you're going to have to get probably a combination of investment grade and non-investment grade type of funds, because the non-investment grade basically means there's higher risk, but it will pay a higher dividend. But anything that pays a higher dividend over 4.5% typically doesn't pay out a consistent dividend and stops paying a dividend a little bit quicker than a staple. When you're looking at like a McDonald's, or you're looking at Verizon pays a consistent 5% dividend. The different companies like Colgate, you name it, the staples of our universe, Coca-Cola, Pepsi, those dividends tend to stay the same. Even when markets go down, they sometimes raise their dividends. But the higher risk type of portfolio, when it comes to dividend portfolios, you got to be careful, because I know there's dividends out there. I offer some of them where there's a 20% dividend or maybe even a 30% dividend, but those are higher risk. And most people who come in have between $500,000 to $3 million of investable assets to invest with us, Randy. And 80% of that money is in retirement accounts, IRAs and 401ks. So what I want you to think about is, why do we have to be so diversified? Well, let's just say you are 73 and now we are forced to take a RMD, required minimum distribution. If you have a retirement account, 401k, 403b, TICREF, whatever it is, eventually you are forced to pull money out. And even though I know it's between 3.65, 3.85%, every year that percentage goes up. Over time, you're going to be pulling 6% out of that portfolio, because the RMD number says you are forced to pull 6% out of that portfolio. And if you got a dividend stock and you have a staple that's only paying 3, 4, maybe 4.5, well, and the market happens to crash, you'll likely get that dividend to pay part of that RMD. But if it only pays 4, that dividend, and your RMD is 6%, you're going to have to sell that amazing stock you have when it has just taken a huge loss to make up the difference for that RMD. So there could be a 2% difference. And then you're eroding and doing all those things that financial conventional wisdom told you not to do. You never sell when the market goes down, but you're forced in this RMD phase of life to sell. So this is why we believe that you should have a basket of goodies when it comes to your retirement plan, especially when you have those IRAs, because you can still win the race and get those returns and other types of investments out there also that never could take a loss, that still keep paying, right? So dividends come and go, and they are never, ever guaranteed.
So when someone writes in something like this, I want to live completely off dividend income. I've also heard I want to live completely off my interest. It seems as though they have something inside them that says, I don't want to get into my principal.
Right.
And is that a dirty word, Sharice? I mean, the money's there and we saved it and we want to spend it, but then we have this anxiety about getting into the nest egg. Should we feel that way? Is spending down my money or getting into my principal, is that a dirty word at Zinnia Wealth?
It's not a dirty word, number one. Nobody really wants to dig into their principal, right? You want to try to earn the return and take that top part off and still grow that principal if you can, depending on how much income you need. So the only way, in my opinion, to continue to grow your portfolio and live on the income while growing the portfolio is to have an asset allocation that has 5 different thriving strategies. Because of those 5, This year, 3 might not do good, but the other 2 might. And then next year, all 5 could do great. And then the year after, 4 could do really bad and 1 could do really good, right? So you got to have the leverage to bob and weave from where you're pulling your income, where you're pulling your RMDs, because not all your money needs to be in the stock market. Not all your money needs to be making 30% a year. We need to have some buckets making, 4 to 5, some buckets making 5 to 7, some buckets making 7 to 10, some buckets that can go even further depending on your risk tolerance. So really getting to know you to figure out what your hopes, wishes, and your dreams are, how much you want to leave as a legacy. And the biggest thing is your liabilities and fixed incomes. If you don't have to touch your assets because you have a pension and Social Security coming in and you're doing great, hey, that's icing on the cake, right? But not everybody has that pension, and therefore most people are pulling out of their retirement accounts.
We want to build you a portfolio for all of these possibilities that are going to be out there for a 20, 25, 30-year retirement. Let's sit down and build that. Let's talk about all the different ways that you can get paid and all the different ways that we can help you protect your money in your retirement years. Give us a call. Let's talk through it. 833-368-3680. We'll do a complimentary retirement consultation. You'll actually see a button on our website that says exactly that. If you go to zinniawealth.com, look for the gold box, complimentary retirement consultation. That's exactly what it is. It's a free meeting where we sit down and talk through your concerns about retirement. 833-368-3680 or zinniawealth.com.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.